Hi, Joe Cantu here, and this is our Cantu Tactical Wealth Management Economic and Market Forecast for September the 8th, 2024.
Welcome to Retirement Tactical Money Management. Joe Cantu, Chief Investment Officer of Cantu Tactical Wealth Management, is your host and has over 30 years of experience in the retirement money management profession. He is a West Point graduate with a master's in business administration and has worked for three of the largest Wall Street firms as a stockbroker and portfolio manager.
Hi, Joe Cantu here, and this is our Cantu Tactical Wealth Management Economic Forecast for September the 8th, 2024. Let's get started. So the S&P 500, it had a big sell-off. This past week was the biggest sell-off in a year and 9 months. And as you can see by the chart right here, it was pretty significant. But let's talk about that just for a moment. What was the rationale for the sell-off? And we're going to talk about that. Then we're also going to talk about how the economy is doing and where we think the market is going ahead. So, one of the rationales for the sell-off is technology stocks were a little bit overextended. So you've noticed that Nvidia had came out with earnings, and also Broadcom. They had come out with earnings as well, and there was a sell-off in it. So we believe that some of the numbers internally were a little bit low, but they had beat earnings and they beat revenue. So a few areas of the U.S. economy showed slowing. And again, keep in mind, slowing does not mean it's a recession. It's just other areas are displayed more growth, but these areas just displayed a little bit of slowing. So what is our analysis overall? So to be blunt, our analysis expects the market to rebound and to continue its long-term bull market run, except at a little bit slower pace. Again, instead of doing 70 miles an hour, 50 miles an hour, but again to continue its bull market run. And the bull market started back in 2009, many years ago. All right, the rationale for the sell-off of the market, I'm going to show you the economic statistics that came out that caused a few of the investors to have some concerns, but it's kind of set the stage for a little bit of a sell-off. Now, and then finally, I'll talk to you about the rationale and show you the numbers so you can see them for yourself for the rebound and the long-term growth. And we say we're going to go into a long-term growth again with short-term pullbacks. Long-term means more than 1 year. Short-term means less than 1 year. All right, the first economic indicator that gave people concern was capacity utilization, and let me talk about that. If you see the downtick here in May of 2024, there's a downtick of it moving down. So before, a capacity utilization is the capacity of a company, say in manufacturing. For example, if a company produces 1,000 widgets at full capacity, and then maybe at a little bit less capacity, it will produce less widgets. All right, so that's a measurement that the Fed does and across the country for manufacturing and other businesses, not just manufacturing, but just for production as well. And so it came in at 77.84, and if you see back a year ago, is about 79. Again, just a little bit of a downturn, but that set the stage. But here is it on a 5-year basis, and you can see that we recovered from COVID-19, and then it's just a slowing that we see. Now, if industrial production was another economic indicator that came out. Again, if you can see industrial production, a little bit of a downturn. Again, just a little bit of a slowing. Not anything significant, but just a little bit of a slowing. Now, if you look at industrial production over the 5 years, you can see that it's recovered from COVID and it's very steady, basically overall. So it's not anything to be concerned about. It's just a slowing. Now, if you look at industrial production for 1925, you can see, and this was Y2K, and then we had COVID 19. Now, another rationale for the sell off, this is the third rationale, was that we saw total business sales just start to ease down a little bit. Again, a little bit of a slowing, but doesn't mean by any stretch of the imagination that we're moving into recession. I mean, none whatsoever, just a little bit of a slowing. If you take a look, here's the 5 year for total business sales, and it continues to remain very, very strong. Now, what is our rationale for a higher market ahead? Historically, the market is a reflection of business, and this reflection is also a reflection of our economy and from a long term perspective. So let's take a look. So here's a very positive economic indicator: manufacturing new orders for manufacturers, durable good orders. Those are things: washing machines, automobiles, big items, big ticket items, as we say in the business. But if you see, there's a spike up here in May. Look at that spike up. This is the 1 year chart. Again, that means there's more new orders ahead. And that spike up, you can see the momentum there. Employment, number two, key economic indicator. Now, employment has been the key economic indicator for the reason that we didn't go into recession coming out of COVID 19, and many people thought we were, but employment has been strong. And if you look at this employment, it continues to be strong. That employment, that jobs number that came out just about a week ago, was a perfect jobs number. It came in at about 142,000. I think they were expecting about 162,000, but 142 was a perfect number in my opinion, because if it was too high, then it would mean maybe the Fed's not going to cut interest rates. If it was too low, maybe below 100,000, it would mean that the economy's in trouble. But no, it was just right. In my opinion, at 142, it means that is a perfect number for the Fed to maybe to cut interest rates, to give them a reason to look at cutting interest rates for the first time. Now let's also look at inflation. Inflation is continuing to move down. If you remember 2 years ago, Fed Powell, the chairman, indicated that he was looking for 2% inflation. Well, we're headed in that direction. It's just a little bit above 2.4%. Again, that's very positive for the market. And then let's look at real estate and rental and leasing. This is just another factor. If you look at it, it's up for the first quarter of 2024, and it's very positive. Again, real estate and rental and leasing is very strong here in the United States. And then let's look at the transportation index. Now, this transportation index is an index that instead of looking at transportation applications, we're going to be looking at transportation index. And this looks at combined transportation of goods and services. And if you see that, there's a spike up. There's actually a spike up in 2024. That means that transportation is strong. And that's typically a telltale sign of the market that we use for investment advisors, is where is the market going. But transportation truly tells a tale, as we say, and it is moving up. So because of that, that's another indication that we believe the market will move higher. Now, finally, let's look at one of the most important key economic indicators that we have in the United States, and that's retail sales. And if you look at retail sales, this is from a year ago, it's continuing to move up. And we had a huge spike in May of 2024 for retail sales. Again, when you look at employment, manufacturing, retail sales, we believe overall here at Cantu Tactical Wealth Management that the market will rebound. Now, what did I want to say about the sellers, about that? In my belief, there was some selling because the tech stock, were overextended. But we believe that once the sellers are completely out of the market, and once they're completely out, that we believe that the market will move higher. So we have to get all the sellers out of the market. They have to, take their profits, on those tech stocks that they want to take, whether it's Nvidia or Broadcom, get that taken care of. And once they're done, we believe the market will rebound and move higher. I have some disclosures at the end. Take a listen.
Joe Cantu, Chief Investment Officer of Cantu Tactical Wealth Management, is your host and has over 30 years of experience in the retirement money management profession. He is a West Point graduate with a master's in business administration and has worked for 3 of the largest Wall Street firms as a stockbroker and portfolio manager. Over 10 years ago, he created Cantu Tactical Wealth Management, which actively balances and selects investments based on a tactical approach rather than the traditional strategic management method. Instead of the buy and hold philosophy, he believes in the pursuit of finding investments showing momentum, performance regardless of the direction of the market. His experience includes IRA accounts, 401k rollovers, trusts, endowments, defined benefit plans, 403bs, and 401k plans. Additionally, he served as a night college instructor for seniors, teaching high net worth retirement and estate planning for 14 years. Podcast views and personal opinions are for educational and entertainment purposes only and does not constitute a recommendation. Investing has risk of loss and you should consult with your own advisors for any financial decisions. Cantu Tactical Wealth Management and Joe Cantu are a fiduciary firm and registered investment advisor in the states of California, Florida, Georgia, and Texas, providing pure independent advice and money management.